Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Thursday, October 13th, 2016, and this is the Daily Report for Gold and Silver. We do have the precious metals trading higher today, at least as far as gold and silver are concerned. Platinum is trading lower on the day. And we also put out a trade alert specifically triggering a signal, a buy signal in gold. Of course, we will go over that in detail when we pull up our first chart. But first, let's go to the boards. Gold closing up in COMEX about $5 on the day, 490 current print, 0.4% at 1258.70. The low on the day has been 54.70 and the high 63.90. When we look at spot is trading at 57 and change, putting it up about $2.50, a low 53 and change, high 62. Net change 0.2% or 20%, 0.2%. As far as silver goes, 1749, we'll call that our current print. 1742 and 1767, those are our highs and lows. That, of course, is when we look at spot. And then lastly, when we look at COMEX futures, 1751, putting it roughly unchanged on the day, up about 1 cent. Let's take a look at our first chart. So traders, we sent out a buy recommendation this morning. Our recommendation was to buy gold at the market. Market was trading roughly 1259.60. Market's currently at 1259, 1258.90, roughly in that area. On today's show, I want to go through the criteria, why we actually triggered that buy signal, and also why it's gold and silver we've kind of left on the sidelines. We did not enter a trade in silver, at least not as of yet. Now, last couple of days, I would even say as far as this week, this market has been choppy. There's absolutely no doubt. When we consider these series of highs here and then kind of move those down, we certainly are getting a series of lower highs, but we're also getting a series of higher lows. So in a very, very minute way, we are getting this kind of a compression triangle. That wasn't the reason for actually triggering the actual buy today, and I sent out a chart with that, and that chart was a weekly chart because in essence what I'm looking at is the big picture with this. And what I mean by that is, regardless of what our count is and how we want to look at this market, the market is trading substantially higher than it was at the beginning of the year. 2016 begins right here. Market's trading roughly at 1050. We get a tremendous surge in a rally from 1050 up to 1376. And then we get a series of pretty hard retracements. At first, the market attempts to hold this 1305 right in here, but we do get this hard breach. And so now when we look at the big picture, we've got a market moving from 1050 all the way up to 1376 and then retracing 38%, which is 1247. Now, we have stops under these lows, which are roughly at 1241. The way that I look at it is a higher risk trade in that we haven't had the actual key candlestick pivot point, the pattern that we have been waiting for. The criteria that I'm using on this particular trade is just the fact that when we consider where the market's been, meaning our highs here from our lows down here, and then we consider the fact, as we talked about, this critical level right now of support tends to be holding. My sense is that if in fact we see this market find support, build a base and move up, we've got a pretty dynamic trade. We could easily see this market move back over 1300, and my initial target would be about 1308. If we are wrong about this trade, the actual risk parameters that we're putting on, getting in at 59, getting out at say 40, you're only risking about $20 on the trade. So it's about, at least I believe, a 3-to-1 risk reward on this trade. We are attempting to bottom pick, so to speak, but my sense is as long as this particular price point holds, we should build a base and then move higher from there. So traders, this is the actual chart that I sent out along with the trade alert email. And this is exactly what I'm talking about, is we've had this one tremendous rally moving us from about 1050 on the bottom to about 1376. And then when we look at our weekly chart, absolutely no doubt, you can see that the close of last week was just above this 1250 line, and now we've got this perfect kind of doji. It was a little bit on the green side as we were a little bit higher, closer to the highs, which came in around 63, but this would be a Harami cross, and that's a pretty strong signal, especially if you get something like the market moving from there into what we call that three-river morning star. And this would be a variation because, of course, it isn't a star format. However, at the same time, it is certainly not below the lows of this candle. But what I would look for, and again, this would be on a weekly chart, would be that as we go into trading next week, we get that recovery. We've got really strong support in this area. Our stop, as I said, put it below 1240, 1241. Here I'm putting at 1242, which is what we're hitting this low at. And that is precisely what I would look for over next week's trading. Now, traders, as you probably have realized, I put out a buy recommendation in gold. Silver, not yet. And the reason that I'm kind of waiting on silver, as I've spoken about over the last couple of days, I really need to see a move above this resistance, this resistance line that was former strategic support based upon these series of lows here. So a move above here, and at that point, gold would be moving also. Obviously, that would trigger a buy signal in silver. But right now, I'm still hesitant about silver. I know that it has to hold this particular price point, which is 1726, but I'm not convinced to the upside. To me, it's not as strong of a case as we have for gold right now. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.